Today on the Block by Block, I'm joined by Kevin Kap, co-founder of WCM, World Capital Markets. Kevin and his team have been building a capital sink, a trading venue so capital efficient that liquidity naturally flows into it without any external incentives. Kevin, welcome.
Hi, thanks for having me on the show.
So you guys have been pretty mysterious, but you're part of the Mega Mafia or MegaETH Mega Mafia ecosystem, and have some notoriety and have a lot of respect because of that. In this interview, we'd love to get into WCM, what it is, and what you guys are up to, and how you know the audience can participate eventually as you guys roll out into some public testnet or where you allow people to participate. But maybe if we could begin with kind of tell us I guess the origin story of WCM. Like, what problem did you see that led to the creation of WCM?
Right. So actually, it's a bit interesting. It's kind of like there's like two sides of that story. So one, even though we weren't very public until about what we do until very recently. We were actually one of the first Mega Mafia teams, like in the first offsite in December. Sorry, in Berlin, more than a year ago now, with all the other like Mafia One teams, and that was like such a great experience actually. And it's when I realized that working with Shuyao and Namik and the rest of the MegaEath team is something that I really wanted to do. Um, how this started is I used to be a trader. I worked at a prop shop, and I mostly was trading. I was like fully on chain. We'd like beta hedge on exchange, but most of the let's say alpha I was finding was on chain. And I really wanted to build something because I didn't like trading, to be honest. And I spent like 2 years trying to figure out what I'd build. And I like played around with like making some games, and at one point I was part of a different startup, but I ended up like when MegaEath came out, there was a time when like there was all these L2s coming out, and it was like a bit cringe to make an L2. And the reason why is they were all the same, and they're all like OP stack or maybe like the Arbitrumons, or there's some margin. There's like very small differences between each one, and because of that, you would see like a token would launch, it would go to zero, the ecosystem was kind of die off, and the reason why I thought MegaEath was worthwhile is because when I, to me, it's obviously like the sort of like final step in like what L2 should look like, um, which is like you make some trade offs on on having like a single sequencer and just beefing it up like crazy, and I mean that can scale, right? And as we're seeing now that mainnet is coming up, like we have a better idea of like what that actually the performance of that would look like, and it's everything they said it would be, which is great. And I think it's kind of the only way in which you can really have like a true DEX is on MegaETH. And we can go into that later. Um, but the start is that I was like, wow, okay, like this is an environment in which we can, you know, the space for creativity was like open in a way where it wasn't before. It's like, let's think about what we would design if we had no gas constraints. If we didn't have to worry about gas costs, if the chain is super fast, etc. And that's the standpoint we came from. So originally, originally it was Techo, and it was going to be a lending market. And the idea was that um, lending needs to be under collateralized because that's how it works in real life. And in many ways, crypto is like slowly becoming a reflection of the real world, and like you can't have like actual like financial system with under collateralized um, lending. Um, and so we were building that. As we were building that, though, we realized that it's not possible to just like build this sort of like risk engine and then integrate other stuff, other protocols into it. You have to build each part of the protocol. So like if anything you want to do with the risk engine with the lending market, anything that you want to connect to, you have to build it yourself. Um, And at the same time, I met my other co-founder. Around that time, I met my other co-founder, soon-to-be co-founder, Lucas, and he was building the same thing, but under a slightly different thesis. Um, his idea was, so he built a derivatives exchange previously and sold it, and then he started working on what is now called WCM, but for now will remain unnamed. And they started from the standpoint of, okay, we built a derivatives exchange. Um, what would it look like for a perfect exchange? And what they figured out was like, okay, there's this arbitrage between lending market, between the between the ETH perp or perps in general, perp funding rates, and lending market on chain. Biggest one being Aave. That delta tends to be around 4%. And how do you close that? You need to be able to borrow money under collateralized in order to execute a basis trade will close that arbitrage. Um, and that was the what's it called? That was like the original vision. It was like, all right, like how do we make on that side? How do we make this the most capital efficient exchange possible? And to this day, like there's no cross margin between spot perps and lending, in part because it's super difficult to build all three. Like there's many different startups that are building spot clubs. There's many different startups that are building spot perps, and there's many different projects that are building club lending markets, and they've raised millions and millions of dollars. And we've done all three in with under like 500K. So then we came together, and then now we have WCM. So that's kind of like the origin story.
Now, it takes kind of a special mindset to identify these really subtle kind of inefficiencies in the market, and then coming up with a product solution, and then you built a project around it, and then now you guys have this product that that we'll be launching. Like what led you? I guess what for you and your co-founders, like what led you guys to even like see these subtle inefficiencies in the market, because
Mhm.
it's hard for most people to see, but you saw something, there was a there, you created a product
Mhm.
out of it, and then now you guys have WCM.
Right. Well, we're traders. So I used to trade at a prop shop.
Hmm.
My other co-founders used to run a hedge fund. Well, there was a prop shop, then they converted to a hedge fund, and now they're working on this. But that's it. We're just like in the market. Um, yeah, trying to find out, trying to figure out how to make better trades. And this is kind of how you like find these insights.
And so as a trader, you've built this product for traders. Is that the right assumption? Like that's the target audience?
Yeah, definitely. I mean, like some of our angels, like the main complaints they have about exchanges like Hyperliquid is that there's no cross margin.
Hmm.
There's no cross margin between spot and perps, and that's kind of important because it means like if you want to do a basis trade, for example, and I keep coming back to this basis trade, but because it's like the simplest trade that I can think of, um, and so that like benefits massively from what's it called, like cross margin. Um, on Hyperliquid, when you do basis trade, you have to split your money between two different accounts, which means like instead of using the one collateral to back multiple positions, you have to split them up, and that reduces your. Let's say you're getting 10%. That means that now you're splitting 10% across two different things. So really now you're getting 5% across like the total position size. So these differences in I think people talk a lot about capital efficiency. They don't really like internalize it. Like it just means more money. You just make more money, and that's what WCM was made to do. It was created to just make our users earn more money, when they're right, lose less money when they're wrong. Um, yeah.
I love that, and I don't think most people. I think most people are going to say, "Wow, yeah, I want to be part of that. That sounds amazing." For Hyperliquid, doesn't cross margin kind of address what you're describing though? With it provides some level of capital efficiency, but I guess
Mhm.
not enough. Or
So sorry. So let me be more specific. Hyperliquid has cross margin between per positions,
Mhm.
so that's good. But they don't have cross margin between perps and spot, and they certainly don't have cross
Got it.
margin between spurt pops and lending. So like, um, you know, if you buy spot ETH and you short the perp, those are two different positions, and the risk engine isn't aware of it. So if you're like leveraged 3x, let's say on the ETH perp, and the price moves 30%, even though on Hyperliquid itself you have the other side of that trade that also moves 30% or whatever. Let's say they're equally sized, right? Then you would get liquidated.
Hmm.
So yeah.
Got it.
Right,
Okay.
on our exchange, you wouldn't get liquidated, and this is important because it means that you can just do less with your money.
That's pretty awesome. Let's get into WCM. So
Yeah.
right now it's being positioned as like the most capital efficient trading venue in crypto, something like that,
Yeah.
right?
Yes.
Maybe unpack that for us and like help us understand, capital efficiency, because people kind of throw that word around, right?
Mm-hmm.
But if we can formally define that and like what it means to the trader.
Mm-hmm. Mm-hmm. Okay. What it means to the trader is that you can open more positions with a lower risk of liquidation. Basically, right? So again, I'll revisit this ETH example because it's like I think that the thing that is the easiest to kind of understand, which is that you can buy spot ETH, short that same amount of ETH, and our risk engine Atlas understands that because you have zero net market exposure, because these two positions are the same amount, no matter how leveraged up this per position. So if you have $100, you can open up $100 spot buy and $100 short at the same time, with the same collateral. And so so technically this is leveraged up because you also have this lag. But the risk engine knows that you're not really levered up because you have these are canceling each other out. And so when you do this, you're able to then go to this is very low risk position. The risk engine knows that. So the risk engine says, okay, on this very low risk position, you can leverage this up until infinity. Not actually infinity, because there are restrictions, there are liquidity constraints, but you can leverage up, let's say on our exchange currently, anywhere between 40 and 50x. So you have these leveraged positions, and then you can leverage up that leverage position another 40, 50x. And now on any other exchange, you would not be able to do that, because the exchange will just liquidate you. Now, when there's not cross margin and when there's just spot and perp separately, you can still do a basis trade. You just introduce leverage. And when you introduce leverage, then as the prices move away from each other, you have to rebalance these positions. And as you rebalance the positions, then you take little tiny losses. Now, when we used to work at the prop shop, we used to do a lot of what's it called AMM LPing, and we wanted to hedge out our we wanted to hedge those positions out. In order to hedge those positions out, you short on exchange, and as the price is moving, you have to keep rebalancing your shorts, so that you don't get blown out, and also so that it actually tracks the price. And as you do that, you're incurring you're getting a haircut every time you move that position around. And for that reason, we would only be able to really open LP positions. I mean, we didn't have I guess the most sophisticated quants, but it was 30. If it wasn't above 30, 40%, it just wasn't worth even looking at. Which means that's kind of how much APY you're subtracting over a year, right? Which is kind of a lot. Especially considering the basis trade right now. I mean, Athena is yielding 8%. So you could see how that makes a massive difference. If Athena was using, here's a better example. If you grabbed Athena's in total deposits, all of their deposits, and you put it onto WCM with the same capital that Athena is producing 8%, they would be producing around 32%. That and that's the difference of capital efficiency. It's would you rather 8% or would you rather 32%?
And that's because of the integration between perps and spot and lending.
Yeah, it's because you can borrow to lever up the basis trade.
Okay.
There's a lot of other interesting trades that you can that are downstream of the ability to do that. that we can get into, but they're like a bit more complicated and a bit more niche in their like the expression that you want to have on your on the market.
It, it sounds like the special sauce here is this risk engine that you're describing that kind of almost prevents liquidation, or it's like liquidation aware. Can you tell us a little bit more about that?
Sure. Yeah. So our risk engine is what makes WCM WCM. So the risk engine just like asks a simple question. Um, it looks at your portfolio and it asks, okay, what are these positions worth? What is each individual position worth? And what is each individual position worth in the worst case scenario? So um and because I feel like I see on the timeline a lot of people talk about um the differences between like lending and perps, and how like even though like both are like like leverage positions, liquidation works very differently. But our risk engine really views it as kind of, it's like it doesn't have to be complicated. It's just like, how much is this worth? That's a simple question. So there's like, so the risk engine, each asset has, let's say, some coefficient, and it's some coefficient based on like liquidity, and some coefficient based on just like what's it called, volatility. It's like, how much do we think this asset can move before we can liquidate it? And so we use these two values to create sort of risk coefficient. And then each position then also has a risk coefficient. So for example, like if you have ETH and you lend it out, this is pretty low risk. So this only cuts like, let's say 2% off of the available margin that you have. And so, you know, if you buy spot ETH and then you open up a per position, that per position has some risk score, depending on how big it is compared to your portfolio. But you can do that. And then if there's, you know, if you still have like 4% of your net asset value that you can use, then you can go to the lending market and you can deposit the ETH there as well. So you can do like all three types of actions. You can engage in all three different markets with the same collateral, as long as the positions aren't like, you're not doing anything crazy with the portfolio. As long as it's, the risk engine understands that like, okay, like this is safe based on like the risk assessment we've done.
This feels like I can't think of another really project that kind of is doing what you guys are doing. You know, you've got perps, you've got lending, you've got spot, but they're very kind of separate products, almost separate projects even, right? But you've got all three like in one, and it feels like it's kind of like a new category. Tell us like your thoughts around that, because as a new category, it's quite exciting that, you know, you could borrow in order to lever, and then you've got kind of exposure to spot and perps. It's like it opens up such a new it's a brand new design space that I haven't seen before.
Yeah, so this is the thing. It's like I hate calling it an exchange. It is an exchange. In my mind, I think of more about it as like an exchange plus a prime brokerage, because a prime brokerage, you know, connects you to the exchange and then let you lever up on whatever you're doing. But saying, oh, exchange plus prime brokerage doesn't sound very sexy. I think the biggest confusion is like, I think sometimes they tell people that we do spot perps and lending, and they assume that it's kind of like a sushi situation where it's like these three disconnected products, and like just like forking Aave or Bento Box and you know, launching a club and whatever is like very different than like having it all connected by the risk engine. The sort of like, yeah, actually, I think this is an interesting. Like, I think Dex design is going down two paths. There's two viable paths. I think one of them is dark pools. I think there's a lot of literature that shows like, or the current literature is that like dark pools are like really like improve liquidity when they occupy around like 30-40% of a market, and after that trails off. And I think there's like other really interesting changes like Aster that are working on this. And the other thing is like capital efficiency maxing, and I think we're the only people that are actually doing that. I've seen some other like pitch decks that have said um, that they're going to do spot perps and lending. And usually, like, where they fall off is that they end up doing everything as like clubs. Sorry, not as clubs, as like pool based.
Mhm.
Pool based is just cooked. Like, the only reason why AMMs exist is because no one wants to provide liquidity to some like illiquid shitcoin, and that's fine. Like, they have a use case for that, but for like real trading, it's like doesn't make any sense. And the same goes for lending. Um, if you're doing the basis trade, um, you need to be able to like actually know what is the lending rate that you're paying, so that you know, like, so you can better understand, like, okay, how much money is this going to make. Of course, like, the perp funding rate is like variable, but having both of these be variable is not ideal at all, especially if you're like trying to like do this trade. um
When we think about like the audience that you guys, that WCM would be really appealing to, like, is we think of traders as kind of like this generic term, right? But there's
mhm,
obviously various kind of personas within like the trader archetype.
mhm,
I do a lot of trading on Hyperliquid. I
mhm,
primarily short on Hyperliquid, um, but I'm not like sophisticated enough to, you know, to do the kinds of strategies that you're doing, for example, or
mhm,
that WCM provides,
mhm,
where you borrow and then you can do spot and then also
mhm,
perps at the same time. It's like I wouldn't know what to do, and
mhm,
so for like a trader that's, and I'm guessing probably most traders are probably like me, where it's like
mhm,
we want to participate and we make decent money, but we're not like sophisticated enough.
mhm,
Is that like the market that you're not necessarily focused on, or do you provide like educational information so that they can learn these types of strategies that
mhm.
are, like, really beneficial?
Yeah, so we want to make it extremely easy for a user to benefit off of all of the, like, you should be able to like slam your forehead on the keyboard and make money on WCM. That is our goal. So we have like a strategies page where you like does executes the base trade for you. Like, it's just a slider. You move it up. It's like, do you want to make more money? Yes. And then you move it up over here, and then you click a button, and then it gets done for you. We're working like making vaults where a vault manager will come and like manage the position for you for an extended period of time. So I'm curious, like, how did you find out about Hyperliquid?
Um, I don't know. It was, I wasn't in like the initial airdrop, but I
Hmm.
just heard about it from a friend, and then I'm kind of a big shorter. It's really kind
Hmm.
of embarrassing, but I love to short. Um,
Okay.
I'm long crypto, but I'm also long on like making money, and for some
Right,
reason, like
right.
shorting is just works for me.
Uh-huh.
Um, yeah, and that's really it. And then I got involved with this project called Infinex, and then they integrated
Oh, cool.
Hyperliquid recently. It's Kane Warwick's project,
Hmm.
and so I've been really kind of doing a lot of shorts there. So I don't know. I've just
Hmm.
kind of just been around.
I see. Okay, so I found out about Hyperliquid. I was curious as to what the reason, but I found out Hyperliquid because I was looking for where to park my USDC and like to get the best yield. Um, and Hyperliquid in maybe like January 2024, December 2023 had incredible yields. It was like, excuse me. Um, I remember the first time I looked at it at the HLP vault was yielding 130% APY. It was so high, I was like, "There's no way this is definitely a scam." And I left. So I didn't deposit. I just like went to go fuck off, do whatever. I was like, I'll check back on this in a month. I come check back on it. It's 80%. The TVL is higher. Um, and I'm like, okay, like, this might not be a scam because it's actually going down at a rate that makes sense. So then I deposited money into it, and then I see like that. I mean, the yields were still pretty good. I think it was like it came out like 60-70% or something for a while, and then the yield was actually accruing, and I was like, oh, okay, this is great. Then I started trading on the exchange. And so what brought me in was seeing this ridiculous number. I mean, I remember like Ohm. I don't know if you remember Ohm from
Oh,
last
dude, I
cycle.
was an early Omi. I love
Yeah,
Omi.
yeah, okay. You
Yeah.
remember when the APY was not in the screen. It was like
No,
outside of the screen at first, and I was like, this is insane. And
it
I
was
watched it
insane.
go from like I watched a 10x. I watched a 10x to like 200 million, and I remember being like, "Fuck! I'm an idiot. Like, why did I not buy this?" And then I bought it, and then I watched it 20x to 4 billion, and the APY is looking at, but that big APY number is like you look at it and you're like, "Oh, this is a scam." But then and then if it actually works, you're like, "Oh wow, I'm an idiot. I need to use this product." Right, I need to use this. I need to buy the token. I need to do whatever, right? And I think that's like to me that's like kind of the advantage of WCM. Like if you go on the UI right now and you move the thing, it's like and you move the slider up on ETH, it's like it's offering like two. It's like and we're basing it off of like current rates, right? So the APY on the basis levered basis trade is like I don't know, like 300% or something at times.
Wow.
And you look at that, like I can't imagine a user looks at that and they're like, this is not a scam. Like they will definitely think this is a scam, but some people who are like more willing to take on the risk of the exchange will come on, they'll use it. The APY will slowly start to come down. Other people will come in as the APY and they'll be like, oh, okay, this is fine. And then this is how we get the ball rolling.
Hmm.
And this is like the main. This is kind of like we're giving it's like this trade we could just like run it as like a hedge fund or as a prop shop, right? But in doing that we would make a lot less money in the long run because this could instead be used to bootstrap an exchange, and the bootstrapping part of an exchange is the hardest part. Like once you have enough once you have enough traders on there, then it like kind of does its own thing, and obviously like you see different exchanges go up and down. But regardless, um to answer your question then, like how do we expect like regular users or users like you to use this is I'd like you to come on and accept the free money that we're going to give you. It's not actually free money, right? But it's like this arbitrage that exists that hasn't been closed, and that people will feel it's too risky at first because of counterparty risk, um, but eventually they'll see that it's not a scam and that it's like, oh, this actually works. And then they'll come on and they'll use it and you'll get some APYs. And then eventually you'll start using it just to do all the things you're doing on Hyperlink, you know? And
I love
maybe
it.
you start, maybe like you read the educational materials you create and you're like, oh, I can execute these other trades. And then you start doing that too. And that's the hope. And then obviously we'll like do all the other go-to-market stuff. We'll do like Twitter and points and whatnot.
Yeah, I love the positioning. I mean, closing the inefficiency gap, like that speaks to a lot of like people that are more logical, but then like, you know, earn like make free money speaks to like everybody, right?
Right,
Um,
right.
all right, let's go back to like as you guys were evaluating. So you identified a problem or an opportunity that you could take advantage of. You built WCM. What tell us the kind of like the journey that led to okay, on which chain should we build this on, and what led like what are the thoughts that you and the team had that made you decide that MegaETH was like the right home for WCM?
Mm-hmm, mm-hmm. So okay, so we actually released an article kind of about this, about L2s, but I'll quickly make a note on L1s, um, which is that the reason we haven't deployed an L1 is because there's an inherent contradiction that every L1 has, which is that, you know, the people who hold the token, uh, aka the founders, the team, investors, like the people who buy the token because they believe in it, like the community, I guess, they all want the token to go up. And if the token goes up and gas is denominated in the token, then the chain becomes really expensive. I started using AVAX in like 2021 because it was super cheap. And by the end of 2021, um, it was extremely expensive. In fact, it was at times like, uh, actually, no, it was never as expensive. No, I think it was like almost expensive Ethereum mainnet at times. Like I remember paying like $50 for transactions, like when the network was really congested, and um, you can't have a clob if there's a high gas cost. Um, they just don't work because gas cost is the spread. Um, and there's actually something more important, which is insight that I had when um, we were I don't know, we were talking to a major exchange um, about, let's say, some sort of partnership, and one thing that was super interesting is that we spoke to like let's say their most trusted market maker. So this guy is like moving massive size, and one of the insights was like one of his insights was that Hyperliquid was able to be successful and it grew so fast because it's not a real DEX. It's just like they made it decentralized enough that you don't have to slap KYC on there, and there's zero gas. Like market makers don't have to pay gas, and so it's really easy for people who are market making on SEX to just move over to Hyperliquid because they don't have to change their market making scripts, and the cost of changing these market making scripts is extremely high. And so these like sex market makers are most of the market. They're like more than 90% of market making is done like on sexes.
Mhm.
And these guys are moving size and they just don't give a fuck enough to like spend all this money to rewrite their scripts to account for gas. And MegaETH is the only place that I know of that where gas costs will be so low that we as WCM will be able to subsidize market makers. And so we're talking to market makers right now, and all the market makers we're talking to are sex market makers. They're not DeFi market makers. Or I mean, we're talking to DeFi market makers as well, but like the people that we want to partner up with are sex market makers. And it's because these guys are very good. They're very good, and they're used to moving like tons of size. But they'll only be able to operate on an exchange where gas is subsidized. Um, and this part is actually also really important. Our gas costs are like 10x cheaper than like every other club. Whether you look at Kuru, whether you look at GTE, obviously Hyperliquid, there's no gas cost. But these are the two main ones that I can think of that are on chain and that you can actually look at. And we're 10x cheaper. And that's just because like my CTO is has been coding for like how many, like 40 years. Like he's been coding almost longer than I've been alive, almost twice as long as I've been alive. And he's just extremely cracked, like can like do very like low level, I don't even have the words for it. He's just very good, right? And so, and because of this, we're able to subsidize. If we were 10x more expensive and on MegaETH, would we be able to subsidize? I don't know. Maybe, but I mean, there's 10x cost is like huge, right? But it's not just that. It's not just the gas cost is extremely important. That's one part. The second part is the speed. Now, speed matters up until a certain point. And so Binance is like, I think like 10 milliseconds latency, 10, 15 millisecond latency, something like this. MegaETH is like the same. I don't think MegaETH could be much faster. I don't think it needs to be. Again, like speed matters to an extent. And really, like when people think about speed, they're thinking of like high frequency trading. And really, what they should be thinking more is like speed in the context of high frequency trader versus high frequency trader, as opposed to the exchange itself being fast. Although, of course, like it has to be fast to a certain extent. Yeah, that's kind of like so that's what we the simple so 3 reasons why you chose Meg, or 4 reasons, right? No, like it's using ETH as gas, so there's no like weird incentives between the token and gas prices. 2, gas is super cheap. 3, like it inherits the security of Ethereum. We're very Ethereum aligned. I've existed my life on Ethereum, and we all have on the team. And 4th is the speed. We need to be comparable to every centralized exchange, and if we're not, then we won't be able to succeed.
And that makes sense. And it sounds like a really thoughtful approach that you guys took as you evaluated L1s and L2s on which to call home for WCM.
Mm-hmm.
Tell us about the role. I know that you guys are users of RedStone Oracle. Tell
Mm-hmm.
us about that and like the role Redstone plays, and also what's it like working with the Redstone team?
Mm-hmm. Yeah, well, I mean, simply put, you can't have a perps DEX without an Oracle. So, like the whole thing just goes to zero without Redstone. So we need a Redstone, and RedStone is obviously super fast, and it's like on MegaETH, it's the main Oracle that we use. So I mean, simply put, it's just like we need it. So thanks. But in terms of working with the team, it's very good. I mean, they respond extremely quickly. Whenever we request things, they get back to us. It's really good. Like recently, we wanted to test out. So we've been doing user interviews on the front end to test out the front end because that's how you make a better front end. And also, it's like a bit weird because there's like different markets, and like figuring out the UX for that is like tricky. And so one issue we were having is like the exchange looked weird because we only had ETH and BTC. And so we thought like it was really throwing off users as they were trying to use it because they're like, oh, there's only two things. And so we're like, okay, well, we need more assets and so therefore we needed an Oracle for that. And so I went into a group chat with RedStone and I asked them, and in like a week or two, like we had these Oracles set up for us on testnet. So that was super helpful. And it's little things like this that like really help. That made me super bullish both on RedStone and on like MegaETH ecosystem in general. Like everyone's super helpful, and that really helps development. Make a better product.
That's awesome. Let's talk about the user interviews. Now,
Mm-hmm.
like you speak like a product person.
Mm-hmm.
I don't know your background. Would love to hear more about it. But in crypto, you don't hear a lot of people talking about user interviews, and which is really unfortunate because we need more of that. And I think
Mm-hmm.
part of it is because there's just not a lot of consumer-facing products in crypto.
Mm-hmm.
I guess what led you to care enough about doing these user interviews and then taking their feedback to improve the user experience? Tell us what that feedback loop looks like, and for WCM.
Mm-hmm. Yeah. Okay. I mean, I'll go through the process first. I mean, simple. I go on Twitter and I look up clubs, DEX, MegaETH, WCM. Like I use these keywords and I press search, and then I find people that are interested in like things that are related to us, and I look at their profile. I see like what they care about. I message them, hey, I saw you were talking about this. This is what I think. They respond. I say something. Then I'm like, hey, do you want to do a user interview? And usually they say yes. The hit rate is like surprisingly high. And everyone and I have to be thankful to like the MegaETH community in general. I've met so many people in the community, and they've all been very helpful. And it's all people that are like surprisingly knowledgeable about exchanges and are like true users. So if there's any other users out there that want to look at the exchange, please contact me on Twitter. But like, I think like what's really so okay. If we just copy and pasted Binance, or Bybit or whatever, it would look good enough. It would look great, and people would use it, and it would feel familiar, feel normal, whatever. The issue is that like it doesn't really make sense because we have spot perps and lending. I guess the lending is the part that throws it off because Binance also has like perps, right? Um, but we really were like, all right, like how do we like we could just add in like a little tab, and it's like, but that feels complicated because you can also do something called like bundled positions where you like where you can basically like add in like an infinite amount of positions and execute them all in one um, transaction, and this is beneficial because you cut that gas costs by like 90%, but also because like sometimes you want to execute things at the same time, atomically. And so figuring out like, okay, how do we make it really easy for users to do this thing that doesn't exist anywhere else was kind of like the driving force behind this. And just generally, like I think there's always room to be improved. Like there's tons of things on the Hyperliquid UI that I just like don't like, that I think is like confusing or annoying or whatever. And I mean they've done a great job. They've like simplified it right in a way that's like really nice. But like I don't know. I see. I've used all these different exchanges, and like there's different things that I like in each one. And like I have a personal preference, obviously, but like I think a good product is really built when you talk to a ton of people, you test it out, and you see what do people like the most. What is the easiest thing to do? Yeah. There's also again like out. So the concept of like margin is a bit different on our exchange because it's always cross margin, and right now we don't have like isolated positions. You have to create a new account. So it's like trying to get into the user's mind, like how risk works on the exchange is something we've been very focused on, just because it's so new and like odd. And for that, we need to do user interviews.
Yeah.
Yeah.
And just on that point, user interviews is great. But on that point, like education is really, really important. What are
Yeah.
some, I guess, what are the plans there to educate, your potential users? Because having, spot perps and lending as kind of a unified product is very new.
Mhm.
And you're going to have to kind of educate people a lot about it.
Yeah, that's one of the feedbacks we received, and so different users have sent us like one thing I always like I start off these interviews by asking them like, um, just like what are they doing now, and then like how do you know what you're doing? So for example, like the way Binance does it, they have like some like risk score or whatever, and I mean, you click the thing, you go to the docs, and then there's like a very long page that explains all the math behind how they're calculating how much margin you have, and you can read that and then really like understand on a deeper level like what's happening. We are working on docs right now. um, on the exchange there's like a page that says like stats, and you can view um, all of like the risk parameters of each specific asset as well. And so like all the information is there. It's just like we have to just like be much better about um, explaining it to users and like putting it together. By mainnet, we'll have all of this ready. We're a lean team. There's only 4 of us. So
Wow, that's pretty amazing. Right. So I signed up and I'm on this like massive, really long waiting list. Tell us like what stage WCM is in right now. It's
yeah.
like, it feels like it's like private beta, right? Or something like that. Private
Yeah.
alpha.
Yeah, kind of. I mean, so the code base is done, and it was actually finished in April, and we've done an audit already on it. And so we could go live tomorrow if we needed to. Um but what we're really just focused on is making the UI better. So it's like first the smart contracts, then the UI, and then social media. And so like I've been focused on social media. My co-founder Lucas has been focused on the UI. He's like having user interviews and just like iterating on design. But really at this point, it's mostly just aesthetics. Um, yeah, it's mostly just aesthetics, and then like we're building vaults as well. But
Nice.
that's kind of like that doesn't need to be there day one. I don't think it will be, but regardless.
As we're talking, I think I need to introduce, I don't know if you know Kane Warwick, but I think I need to
Mhm,
introduce you to him because
mhm,
this is exactly the kind of product that he would want inside of Infinex. Infinex is, if you're not familiar with it, it's like a super app, but it's really a wallet. But
mhm,
it has like a section of applications where it's like one click and you're inside the app,
mhm,
and you don't have to like sign in again. You're already in there, and then all of your assets from Infinex is already kind of shows up in your portfolio.
mhm,
Um, and so they're building kind of like this like supply side. So the supply side is going to be like all these applications inside of their app.
mhm,
And then the demand side obviously are like people that need to use these applications. But I can see him being very, very excited. But one thing that they've done that I think is really interesting, which goes back to kind of user interviews, they had a bunch of like early users like me, um, just journal every day like how we use Infinix. And
mhm,
so I just just journaled on paper like here's what I did today and this is like what happened. And then they took all of that information after about 2 weeks of journaling, and then now they're using that to improve the product. Just an idea. I know
mhm,
that's as a product person that's like been very helpful for them.
mhm,
Um, but I think I need to after this let's talk. I need to I think introduce you to him. I would love to see WCM inside of Infinix. That would be
mhm.
amazing.
Yeah, definitely. Yeah, that'd be great.
Cool. Well, so how can people get involved other than like signing up for the wait list? Because this is pretty exciting. I would love to
Mhm,
try the product out. I'm
mhm,
already a pretty active perps trader, but
mhm,
I don't know how to use perps and spot
mhm,
and lending at the same time. And so that's like there's a learning curve, and I would love to
mhm,
get going on that.
mhm,
How
mhm.
could people learn and I guess participate other than just like in waiting, submitting their information in the wait list?
Yeah, so we've been slowly what's it called, rolling out like more information about WCM. So you can go to our Twitter page, WCM_Inc. Alternatively, if you really want to use the exchange now, DM me. I respond to all of my Twitter DMs. I check it at least like twice a week. So if I don't catch you like the first time, I try to always respond within a week. Unless you just say hey, don't message me just hey. Just say hey, like I want to like check out the exchange. I'll ask you a couple questions, and then we'll go from there.
Yeah.
And you'll have access to it. It's open to everyone. Well, it's open to everyone who DMs me. And yeah, we're always looking for feedback. So like yeah. Anyways.
No, that's cool. I chuckled because like I get DMs that say like, "Hey, can I ask you a question?" And it's like, yeah, just ask the question.
Yeah, I'm not responding to that. Just
Yeah.
ask the question. Exactly.
Awesome. Well, Kevin, this has been so fun. And I love hearing kind of innovation in crypto. This is not a criticism on crypto at all, but I see a lot of like copy pasta, but like innovations like WCM, you don't see a lot of that. And it's really exciting to see that you guys, you've identified a problem in the space. You've created a product that addresses that problem. You've productized it by almost like vertically integrating, like perp, spot, and lending. And that's like so beneficial to traders. And I'm like really excited for you guys and for, for more people to learn about you. And I really can see like you guys taking off and doing really, really well. So thanks for taking the time to speak with us. And I'll be sure to share all of the, the handles and all of your information in the show notes. Cool. Thank you, Kevin.
Yeah, thank you. See you. Bye.